Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So let me actually show you what happens, and this is how exactly you can use. Up here you can see the dates, Steve, and here are the last 10 days basically surrounding the earnings event. And you can see the straddle. We actually priced the straddle, so you can see on the top left corner what the straddle was basically 5 days before earnings and 5 days after. So you can see, and this purple line is the front month expiration, and this yellow line is the second month expiration. And you can see how if you bought the straddle here, how you would have done 10 days later. So here you would have made money, here you would have lost money, here would have lost money on the straddle. Now the people like me, professionals, they like to look at the volatility, and you can see on the bottom line where you see the expiration one, the front month volatility and the second month volatility, how it basically gets crushed after earnings. And this is why, like, you sometimes buy calls and the stock goes up, but you still don't make money because the volatility gets lowered so drastically after earnings that you can't make money. So usually when the volatility is high, you kind of want to make a bet, but you want to be Vega neutral. So maybe you want to do a call spread instead of just buying calls straight out naked.
You guys are giving us a graphic representation of what professional traders have been doing for years. Is that correct, Stefen?
Right. So basically this thing goes back up to 12 earnings cycles. So you can tell, back in January 30th of 2008, if you bought a straddle 5 days before Amazon's earning, that you would have lost. So it's a cool way to basically figure out very quickly how the straddle usually does in Amazon. You can kind of tell, like, it's not that great of a winner in terms of the straddle, because I'm thinking there's a lot of interest in it, so the volatility gets priced pretty correctly.
Okay.
Now let me show you something else that we have that I use a lot, is the scanner. So the scanner kind of basically tells you, scans the market and tells you what's trading. Here you can scan for high option volume, and you can see from here what companies are trading unusually high volume in options. And you can always hear people on CNBC talk about, hey, like this stock had a lot of like call put volume. And we actually can use ISE sentiment, which is awesome, provided by the ISE. And basically this is information that ISE keeps track of, and they keep track of customer opening orders only. So you can kind of see like what people are doing. Instead of like hedging it with stock, they might be actually putting on a position. So let's see. Oh, hey, this is kind of funny. UUP power shares. So it looks like this is a double bullish dollar, and you can see right here, if you click on it, you can see what's trading, and on the right you can see all the trades. Now the thing that's interesting is if it's green, that means people have been buying it on the offer, and if it's red, people have been selling it on the bid. So if you're doing buy rights, you would be selling it on the bid, and if you're speculating, you would be buying it on the offer, which will be all green. And you can see how majority of the trades are green, and they traded 3,397 contracts. So the way I do it is like, hey, look, I look at the chart, let me see how the stock chart is doing. Okay, so this is the double US. It looks bullish, and people are basically betting that it's going to go up. Another scan, if you look at the bearish scans, you can see, let's see if it's something I recognize here. You can see all these stocks where there is a lot of put buying. And let's see, Wells Fargo. All right, so it looks like there's tremendous amount of puts being traded in Wells Fargo. And if I look at the company chart, you can see right here, there were 30,000 puts traded on the offer by customers opening. And here we actually do a summation of all the trades together, and all the bets together are saying that they're leaning short, so they're negative on it by $2.2 million, and they bought premium net for $3.4 million. So you can see on the bottom are all the biggest trades. So you can kind of see like, hey, you know, people are actually buying a lot of puts in Wells Fargo. Maybe they think, you know, the run-up in the financials are over. Also, like over here on the left, we have this thing called a ticker, and basically it records all the largest trades in the market. So basically before, what it used to happen is when we were sitting in the crowd, you can actually hear all the large trades go up, and you can actually feel it because there was a lot of you know, noise going on from that pit. But since most of it is done electronically, a lot of the large trades kind of just go unnoticed. And basically what we did was build a system where you can keep track of the whole trade. So let's see if we can pick out something that's interesting. So let's see these. Looks like E-Trade, and you can see if I look at the company page, you see how it's all red here, and basically what people have been doing. Let me explain this real quick. This is the symbol, this is the strike, this is the quantity, price, where it's traded, whether it was a spread or regular trade. This was the market at the time, implied volatility at the time, and the underlying. So you can see this whole day, everyone was selling calls on E-Trade. So all the largest trades, they were basically selling calls. So you can kind of tell, like, oh, maybe the stock, you know, had its run, and it's, you know, it's not going to go up anymore since people are so confident in selling calls.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.